Ever feel like the market moves against you every time you enter a trade? Like it hits your stop, then rockets in your direction? That's market structure, and in this video I will show you how to read it like smart money does, how to spot trends, reversals, and manipulation so you can stop trading blindly. Market structure is the way price moves through swings. In an uptrend, price makes a higher high and a higher low. Here, in this example, you see here clearly, higher high, higher low, higher high, higher low, higher high, higher low. That is an uptrend. In a downtrend, on the other hand, it does the exact opposite. It makes a lower high and a lower low. In this example, it's lower high, lower low, lower high, lower low, lower high, lower low. In consolidation though, which is a bit more tricky, the price is ranging, which means it kind of makes equal lows and equal highs. In this example here, you can see this one is low range and this one is the high range. And what does the price do? It bounces up and down, equal high, equal low, equal high, equal low, equal high, equal low. That's it, isn't it easy? Price moves in impulses, strong moves in one direction, and corrections, pullbacks. Understanding these swings is the foundation of everything else. A break of structure, or BOS, happens when price breaks the most recent swing high or low in the direction of the trend. For example, here in the chart, with my amazing drawing, here we have an uptrend, which makes higher highs, higher lows, higher highs, higher lows. A break of structure is this move here, because it breaks the previous high and it goes again for a higher high. Vice versa, in a downtrend, a break of structure is this move over here, the move that breaks the previous low and makes a new low. Now let's find how it implies in the chart. Here, as we already saw, it was an lower high, lower low, lower high, lower low, lower high, lower low. Here, this line is the break of structure because it broke the previous low and it made a lower low. Same here. Where is the break of structure? Over here, this move right here, because it broke the previous low and made a lower low. Now, let's go see in our uptrend. Okay. Here, we see higher high, lower low, lower high, higher high, lower high, higher high, lower high. So, the break of structure for this one is here. That's a break of structure. Also for this one, it's here. That's a break of structure. Why should I care, you may ask? Because break of structure confirms that the trend is continuing, and you can use it either to enter on pullbacks or hold trades longer with more confidence. And also because I said so. Now that you all learned what the break of structure is, let's introduce change of character. What is a change of character? Basically, it is when, for example, in an uptrend, it makes a new lower low. What is that? So here we have an uptrend, higher high, lower high, higher high, lower high, higher high, lower high. And the change of character is when the uptrend makes a lower low. This is the first indicator that a downtrend may begin with higher, lower low, lower high, lower low, lower high, lower low. Let's find an example in the market. Here, kind of. It's not so clear. You can see it's a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low, etc. And here it makes a higher high, lower high, higher high, lower high, higher high, lower high. So this place over here is the change of character. No, this move over here. Because it broke structure against the trend. It was a downtrend, it broke structure to the upside, so now an uptrend begins. Now you may be asking yourself, how can I trade with it? Why do I care? Here's how. First of all, you identify the trend. Is it going upwards, downwards, or sideways? The most important thing that you should never do is trade against it. Like, never. Secondly, wait for pullbacks to enter. You don't need to trade at the top nor at the bottom. You need to trade at the pullback. You need to trade before the market actually does the move that you want it to do. And thirdly, above all, wait for confirmation. Don't guess for reversals. You don't need 20 indicators. You don't need to chase price. You just need structure. Learn it, apply it, and you'll start trading with confidence. If this helped, like the video and drop a comment. Want me to cover live examples or build strategies from this? Just say the word. Don't forget, keep the green side up.